Hey everybody, this is Greg Gossett, and today is Saturday, March 5th, 2022. And thank you so much for spending the time and coming here and visiting for the Gossett Trading and Mentoring weekend update of my current trades and our look forward to next week for some new potential trades. I hope you're staying safe out there in the market. This has been a very difficult market with all the volatility and all the headline risk and all the news. And it's been a difficult, challenging start to the year, especially with swing trades. So this is what we are going to do in the podcast today. First of all, we're going to take a look at my current swing positions. We're going to talk about when I bought them, why I bought them, and how I am going to manage them moving forward, either to the upside or to the downside. Of course, I trade multiple time frames. I trade daily trades. I trade weekly trades. I have monthly trades. I also trade all day long day trading. One of my philosophies with trading is to trade as many different time frames as possible. I really believe in this concept. Your dailies might not be doing well, but your weeklies might be doing fine, or your dailies and your weeklies might not be doing well, and your monthlies may not be doing fine. In my particular case, this month and in the last couple of weeks, it has been challenging, and weekly trades haven't been working, daily trades haven't been working, monthly trades haven't been working, which is fine, but I do day trade all day long. And again, the day trades have been good, been helping me mitigate the losses for the other time frames. But sometimes day trades don't work, but the weeklies and the dailies and the monthlies do. So it's very important to me to just trade as many different time frames as possible, position size correctly. Any one particular trade doesn't mean anything. I look at each trade as just one trade of the next 1,000 trades, but the key there is that the position sizing, you have to position size based on volatility, is very important, especially in a market like this where we have the volatility, and have your maximum allowed losses, your maximum allowed dollar losses, end of day stops, emergency stops, and we'll go through those. But the key is that market environments are not always conducive to making money. I mean, sometimes it's just super easy to make money. Sometimes it's very difficult to make money, and it seems like you're never going to make another penny again. But then it's going to switch, and then you're going to feel like you're never going to lose another penny again. And both of these are incorrect. The key is when you have drawdowns, stick with your plan. Even more so, and just go ahead and follow your process and get out when you are wrong. Eventually, you will catch an uptrend. Eventually, if you're trading correctly and using good trading principles, you will overcome. If you have an edge, you will overcome the drawdowns that you have. And let's hope that happens soon. But you never know, right? You never know. This is a good lesson in patience and in following your plan, executing what you're supposed to do. So, like I said, first of all, we are going to take a look at my current positions, talk about when I bought them, why I bought them, how I'm going to manage them going forward. After that, we're going to talk a little bit about trader psychology, the importance of it. It is the most important skill that you will ever learn in trading, everyone. I promise you that. I've been trading for over 25 years, and using good trading principles for entries, exits, support levels, resistance levels, position sizing, all that is very important because that creates your plan. But after you create your plan, you have to follow your plan, and that's the key. That is why trading psychology is so important, and it is a skill. And if you find yourself battling with this, not being able to follow your trading plan, what I have found is that getting someone else involved, maybe a boyfriend, girlfriend, husband, wife, relative, let somebody know what you're doing. Let somebody see your results. It will make you accountable, and it will make you a better trader. So we'll talk a little bit about trader psychology. After that, Frank, it's a good friend of mine, has posted on Twitter, was with me for years when I was doing the live stream podcast. He does post a poem every day, and I'll show you his Twitter channel. in just a bit, but I love his poems and I do want to throw one of those in there as well. Hope you enjoy them. I always enjoy them as well. After that, we'll go down through my watch list. We'll go down through the watch list, each stock one by one. We'll take a look at its current market structure. We'll see if there's any trades possibly for next week. When I go through these, it doesn't mean that they will have already triggered or that they are already a buy. Please don't confuse. And these are my trades. These are what I'm looking for. But I think it's a good way for you to follow along. And for next week, look at some potentials. We may look at them now and go, well, they're not ready yet. They have to do this. They usually have to go higher, or they usually have to go lower in order for me to get interested in. But hopefully it will give you a decent watch list to follow next week to kind of follow what I'm doing. So hopefully that will be helpful. And then, so I'll go through the watch list one by one. I will mark each stock that looks decent for next week, and I will explain to you what I'm looking for as far as price action for next week. All right, so that is going to be the plan. I do have to run the U.S. legal disclaimer. It takes about 40 seconds, and so I will see you right back here as soon as it finishes. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Okay, well, thanks for holding through that with me. Let's get started. On Friday, I did place a trade on SPY, S&P 500. Why did I buy the S&P 500? Well, I want to introduce something new to you. Actually, never really mentioned this too much in my live stream podcast because generally we're not down at these levels, but most of the time I look for deep dip buys off of the 200 or the 250. Well, because of the market volatility, we have gone so low, and so I have introduced the 300 SMA as well as a line, a possible entry line. And you can see that is the purple line here. It did respect the purple line on that big reversal day that we had back on the 24th. You can see it closed under, closed back over. I did not buy it there. However, we went up, we moved up from there, but now we have come back down. And the reason that I bought this on Friday at the close was because of the intraday rejection of the 300-day moving average. You can see the price opened above, went down, tested it, went below, closed back above. That is the signal for my trade. And I want to show you over here on etfreplay.com. By the way, I'm using this with permission from etfreplay.com. But what I've done is I've put in the SPY, the moving average length 300 simple. And so when we go back and we back test this off of the 300, how does it perform? Well, it performs really well. Just the simple fact of being in the SPY over the 300, as long as it closes over the 300, and being out of it and going to cash when it closes below, these are the results. Pretty simple, right? Return was 413%. Buy and hold was 350.9 during the same period. So it did beat buy and hold, but the more impressive part is the drawdown. Using this approach, the drawdown was only 22.6%, buying and holding negative 55.2. So about half of the loss of buying and holding, and it did outperform buying and holding. So would you rather have a 413% gain with a 22.6% drawdown, or a 350.9 compared to a negative 55.2 drawdown, right? This is all hypothetical going forward in the future because we don't know if the 300 is going to hold, but it gives us a line, stay in above, get out below. And that's the whole key with trading, is picking a level. If it goes your way, great, stay with it. If it closes underneath, just go ahead and get out. I know that sounds simplistic, and it's not that simplistic because there are actions that you have to take. There are levels above you where I would be getting out of a portion or a half of my position. But suffice it to say, this is the reason why I bought the SPY. We had a big up move. We kind of came up, we consolidated, we did come back down. We had a higher low intraday rejection of the 300-day moving average. So down here, my emergency stop, most important thing, and I want to take you through this just as a reminder, but when I look at this and I say, okay, I'm going to buy this with this higher low rejection of the 300-day moving average, great. How many shares do I buy? I always talk about how important it is to position size based upon volatility, and this all has to do with the 2 ATR value. ATR means average true range. That's what we expect a stock to move in any one particular day. So a 2 ATR means it's twice that, and that's why I want to place my emergency stop 2 ATRs below my entry so it's outside of noise. So I'll get to the emergency stop in a minute, but the most important part to start with is if you do see a trade, how do you position size? Well, first of all, you have to take into account how much money you have in your trading account. Let's just go with, in this example, let's just go with $50,000. All right, if you have a $50,000 trading account, a good rule of thumb is to not risk any more than 1% of your total capital on any one particular trade. So if you have $50,000, 1% of $50,000 is $500. That is going to be the maximum I'm going to lose on this trade in this particular position. If you have $100,000, 1%, okay, $1,000, it's the same. But let's just use the example of a $50,000 trading account. I see this, I look at the back test like I just showed you on etfreeplay.com. So what I do is I take my $50,000 times 1%. $500 is my maximum allowed loss. That's the maximum I'm going to lose on any one trade. Now, what do I do with that? Well, I take the $500, I divide it by the value of the 2 ATR, in this case, divided by 17.97. And that tells me to buy 27.8 shares. So what that means is when I buy it, if it does come down 2 ATRs from my entry, I will lose $500. Now, 95% of the time, you are not going to hit your emergency stop. So don't think every trade you're going to lose $500, but then you have to revert to your end of day stop. Well, my end of day stop is a close below the 300-day moving average. So bought this on Friday here at 432.07. Right now it's 432.10. So, right about break even. On Monday, if it were to close below the 300, I would just go ahead and get out. Alternatively, if Monday was a huge down bar and we just came all the way down to my emergency stop, then I would have to get out. And in the example that I just gave you, how much would I have lost? I would have lost $500. So first thing, identify your entry and identify your level, which is the 300 SMA in this case. Position size, taking your maximum allowed loss, dividing it by the value of the 2 ATR. That tells you how many shares to buy. Then, as soon as you buy it, like I said, I bought it here at 432.07. Then what you need to do is you need to take your entry price and then minus the 2 ATR from that. And again, the 2 ATR was 17.97. So if I take my entry price minus 17.97, in this case with the 2 ATR, then that tells me to put my emergency stop all the way down here. Now, most of the time I get out of all my trades at the end of the day. I'm an end of day trader. But in this case, if your emergency stop is hit, it's hit immediately. You get out immediately. You do not wait for the end of the trading day or the trading week or the trading month, depending on what time frame charts that you're using. So identify the trade, position size, place your emergency stop, know where your end of day stop is. Up here, I have a line. You can see the orange line here. First of all, I've talked about the stuff to the downside, right? Most important, managing risk. To the upside, the orange line is 1.5 ATRs from my entry. And you can just see, here's my indicator at 1.5 ATR is 13.47. If it gets up to this line here, that means I will be going into trailing stop mode, but I don't go into trailing stop mode unless I've moved at least 1.5 ATRs from entry. So that's my trade plan. I saw the intraday rejection of the 300 SMA. I back tested it. It does back test well. That's why I decided to take the trade. I position size using my maximum allowed loss divided by the 2 ATR value. That tells me how many shares to buy. I also use that same 2 ATR to place my emergency stop below. In case everything goes against me, I don't want to lose more than, in our example, $500 on the trade. I have my end of day stop here. If it closes below the 300, I'm out with the end of the day stop, and then placing my 1.5 ATR trailing stop above. So I have a complete trading plan. I have a legitimate entry. I have a legitimate line in the sand, which is a 300. I place my emergency stop. I know where my end of day stop is, to both to the downside. If it moves up, I know where I'm going to go into trailing stop mode. So I have a complete trading plan. That's the key. I have a plan. Right? I don't know what's going to happen with this particular trade, but based upon the back test, there does seem to be an edge here. And so now I have to follow the plan, right? We're talking about trader psychology. I have to follow the plan as well. So we shall see. It's about break even right now. I like the setup. I like the higher low rejection of the 300. And we'll see what happens. Right now, I just have a plan. I just have to play the plan out. Okay, so Goldman Sachs, I am still in Goldman Sachs. What we had here, we had an under 30, over 30 on Goldman Sachs. Bought it here at 339.90. The next day it took off like a rocket ship, and this is a good time to explain that whenever I have a move from any previous close that is up the value of 0.45, right now it's 4.34, I take partial profits. I take 10% of my position size off. If I had 100 shares and it reached one of my profit targets, I would take off 10 shares. If it hit 2 profit targets, I take off 20% of my shares, right? So 10% at each place. So the next day we had a nice bounce. I was able to get rid of 20% of my position at profitable levels. That's the key before it turned back down. So my entry was an under 30, over 30. We also had a double bottom with a bullish divergence. We had a rejection into the negative third ATR channel. It did continue, took 20% off. Where's my end of day stop? Well, my entry was an under 30, over 30. So my exit is going to be any close below 30 RSI. So if we walk through this, you can see that here we are at 33.14 RSI. Look at the bottom right here. Next day, of course, we went racing up, took profits. Then we came back down, 37.71, 32, 24, 39, 24, 37, 72, and now we are at 35.83. So it is still holding the 30 RSI, and that was my end of day stop. You can see down here is my emergency stop. You can see a couple days we got a little bit close to this emergency stop. We haven't hit it yet, so I'm still in the trade. If it does, if, for example, on Monday come down and touch this in the morning, I will get out immediately because that is my emergency stop. If it moves up to the orange line here, then I go into trailing stop mode. So this is down. I like to play offense and defense when I take a trade. Defense is the emergency stops, end of day stops. Offense is selling a portion of my position into strength. So if it does turn around, like in this example, I mitigated the loss by taking off partial to the upside. So playing offense, defense, extremely, extremely important to me in my trading. And by doing that, this particular year in 2020, it's really saved me a lot of money. So it's something I really advocate for, and really works well for my trading. So this particular trade, from entry to current price, is down about 3.11%. Wish it was up, of course I do, but it's not really down 3.11% because I took the 2 profit targets off here. But too hard to do all that math, just black and white here. This is down 3.11, but I'm still long because it's still holding the 30 RSI and it has not hit my emergency stop. Okay, we'll go through some trades that I took last week. Bad week for swing trading. It's been a while since I've had a week like this, but it's just a good time again to mention that it doesn't matter what kind of trader you are, how good you are going to have periods of drawdowns. And of course, what's going on with the world right now, it's been very volatile. You know, it's been, it tests traders' patience, especially with swing trades this year. But keep in mind, it's not always rainbows, butterflies. With trading, there are periods of drawdowns, and you have to get used to them, and how you behave yourself and conduct yourself when you have drawdowns is going to determine really the future of your trading. If you get frustrated, if you try to revenge trade, if you try to make the money, your losses back quickly, I'm telling you, it does not work. I have been through this. The best possible thing you can do when you're having a bigger drawdown like this is to actually trade smaller until you can kind of get some profitable trades going. And if you're using 1% of your total trading account, you should be trading smaller for a variety of reasons, but mainly if your account's going down, if you have a $200,000 account and you risk 1%, that's $2,000 per trade. However, hopefully this hasn't happened to you, but if your account size gets cut in half, now you're down to 100,000. Now you're only using 1% of 100,000, which is 1,000. So of course your position size is going to be small. So that's why just using 1% of your total account, just by default, will adjust. As you make more money, you'll be buying more shares. As you lose money, new trades, you'll take fewer shares. All right. So hope that makes sense. All right. So I did buy Microsoft here. I like this setup. I bought it back here on the 2nd of March. We had a close under, close back over the 200-day moving average. That is a good back tested approach. I tested that using ETF replay as I showed you before. It also had a V2, which is a trade trigger structure that I really like. Here is day 1, day 2. Day 2 goes below day 1. Day 3 closes above day 1's close. That makes it a legitimate V2, but in conjunction with that, we also have the close under and the close over. I think the best trades, in my experience, are the trades that have as many combination or confluences of indicators or triggers or entry signals lining up, and that is why I did take Microsoft. Close under, close back over the 200. That's one. We also had a V2 here as well. Even with that, the trade didn't work out. However, this is a good example of getting in and getting out and then seeing the market fall again. So I did get in at 341 cents on the 2nd of March. Next day, boom, immediately out. It opened up higher nicely. Woohoo! Did not hit any profit targets. Came back down, closed below. That was my line in the sand, was a close below the 200-day moving average. I had to get out. Well, I did get out at 295.80. So I got in at 300.41, got out at 295.80. That was my exit. Well, was I glad that I did? Yes, of course, because Microsoft was down another 2.05% on Friday, and I wasn't in it because I took my stop, right? So done with Microsoft, did have a loss of 1.51% and no profit targets, and never went up again as much. Actually, interesting here on Microsoft, this is the 250. This would have been a legitimate trade on Friday with the bounce at the 250 inside of this large range bar here, and then it would be the same thing, right? Oh, We have an intraday rejection of the 250. I'm going to take my maximum allowed loss. I'm going to divide it by the value of the 2 ATR. That's going to give me my emergency stop. Where would my end of day stop be on this? You're right. It would be if we close below the 250. Now, Monday, if we close below the 250, not a legitimate trade. However, look here. If it comes back down to the 300, I will be keying off of the 300. So it's all about looking for legitimate levels to key off of. And one level for me was a close above the 200, failed, had to get out. Like I just mentioned, this was a legitimate trade here on Friday with a rejection of the 250. If it doesn't hold, I would love to buy Microsoft if it comes back down to the 300-day moving average. Caterpillar, this was a very, very frustrating trade for me. I did buy Caterpillar back on the 28th of February. We had a higher low close back above the 30 RSI. I like higher low closes better than about anything, whether it's using the 200, higher low V1s, V2s, higher low under 30 over 30s. But back here on the 24th, we went under 30. Next day, we went over 30. That would have been a legitimate signal there. Did not take that trade. I took the trade the next day when it again went under 30 and over 30, and also tested the negative third ATR channel. 92% of prices tend to bounce, they tend to stop going down or bounce when they get to the negative third ATR channel. So this was my confluence of signals: a higher low intraday under 30, over 30, my entry 187.33, and the bounce at the negative third ATR channel. However, did not turn out. The next day, boom, right back down. It closed under the 30 RSI for a loss. So I got in at 187.33, got out at 183.20 for a 2.29% loss. You know, with proper position sizing, 2.29% loss, not a big deal, but you can see as soon as I got out, then it just rallied. So I was in the right area, but I just missed it. And that's a frustrating part of trading, everyone. It really is. It can make you think to yourself, well, why am I taking these stop losses? Because I take them and then it just rallies. And if I would have just held, I would be in the money nicely, which of course in this trade I would have been, right? But I have to follow my rules. That's the key, because a lot of times that's going to happen. I would say about 85% of the time, your stop hits, you're going to get out, and it goes up, and you wish you would have stayed, and you might talk yourself into going, oh, I don't need a stop loss. Yeah, you do need a stop loss. I promise you do, because that 15% of trades that go down and keep going down will wreck your account. I've been there. I've been trading since my 20s, back in the 90s. And all it takes is one big monster trade to just devastate your account. So I understand the emotions behind it. I understand the thinking of, oh, I just shouldn't use a stop, because yeah, if I hadn't used my stop here, boom, would have been a great trade. But you have to do it. So anyway, Caterpillar, I did take a 2.29% loss on. Facebook, well, here's another challenging trade. I did take Facebook when we had a higher low under 30, over 30 back on the 25th of February. I bought it 210.20 with under 30, over 30, and we went under the negative third, over the negative third, and actually we closed above the 5 EMA as well. So what do? Take my maximum allowed loss. I divide it by the 2 ATR value that tells me how many shares to trade. And the 2 ATR value also tells me where my emergency stop is. It was all the way down here. But like I said, about 95% of the time, you're going to have an end of day stop, not an emergency stop. And I did have an end of day stop here on the 1st of March when it closed back under 30 RSI. And let me just show you. If you look over here, you can see it closed at 31.01. So, and it was lower during the day, so it did go under 30, over 30. Next day, 31.41. Is it still holding the 30 RSI? Yes, it is. Next day, 28.95. Well, that was my signal to get out. And I did get out here at 2:04 even. Next day, went up again, but you can see here now we're 200.06. We are lower than I got out. It's always a good feeling. I mean, it's never a good feeling to take a stop loss, but it's a great feeling if you did take your stop loss and the market continues down, and it confirms that you made the right decision. So I am out of Facebook. I did lose 2.49% with a close back under the 30 RSI. Currently, we're at 29.63, so we're still under the 30 RSI. Come Monday, if it closed back above the 30 RSI, I may take another position. But I did take the SPY position on Friday, and just as a general rule, everyone, I usually only take one trade per day if I'm trading dailies, one trade per week if I'm trading weeklies, one trade per month. I like to try to narrow it down to just the very best trade, and I just think it's a good policy, and it keeps me from going, oh, I like this one, and ooh, I like this one, and ooh, I like this one, and then next thing you know, you have 19 positions. Difficult to manage. Probably your risk management is out of sync. So what I have found over 25 years of trading, and what I really feel like has worked for me, is picking the best trade of the day. I know it sounds a little Pollyannish, maybe. I don't know if that's the right word, but you know, it sounds like, ooh, the trade of the day, right? But I just feel like it forces you to just take the best trade. It keeps your positions, it keeps your the number of positions that you have manageable, and I think it's just a better holistic way to trade. So I am out of Facebook. All right, so those are the dailies. Let's go over to the weeklies. The losses continue. I really like this trade. This was a weekly trade. I took this back on 225. Beautiful, actually beautiful. Under 30, over 30. That's one confluence of signals. Under the 300. Over the 300, great combination of signals there. But even if you have 19 signals lining up, it does not ensure a positive trade. So on the weekly, position size is just the same as on the daily, except that your 2 ATR number is going to be much larger. Let's just real quick go back, revisit that $50,000 trading account. 1% is 500. 500 divided by the value of the 2 ATR on the weekly divided by 9.24 tells me to buy 54 shares. Well, that doesn't sound like a lot of shares. Well, the reason it doesn't sound like a lot of shares is because the value of the 2 ATR in the weekly bars move so much larger than daily, obviously, right? Because you have 5 days instead of 1 day. So this number is going to be larger. Therefore, you have to buy fewer shares to adjust for that. So, down here, I put my emergency stop, I put my entry minus the 2 ATR, and this is percentage-wise way down here. I mean, this is like 34.53%. You might think to yourself, man, if you hit your emergency stop, you lose your whole account. That's not true. I would still lose only the $500 that I was allowing myself to lose. Same on a monthly trade as well. So if your emergency stop's way down, don't think, oh, I'm going to lose so much money, because if you do it correctly, if you take your maximum allowed loss divided by the value of the 2 ATR on any particular time frame, it accounts for all that, and you would still only lose your $500, right? So my emergency stop was not hit, but last Friday, yesterday, it did close below the 300-day moving average. It closed below the 30 RSI. You can see the RSI on the weekly here is 28.87. So that tells me I had to get out of the trade. So I did with a 4.9% loss. So decent, pretty decent down move, but dollar-wise, not too bad because I position size correctly. All right, so I'm out of Twitter with a loss, and then on the monthlies, I also trade monthly bars. I did buy Southwest Airlines here on 131.22. What was the signal? Well, we have a V2. Here is bar 1, bar 2, bar 3. 2 goes below bar 1. 3 closes above bar 1's close. We also closed under the 100 SMA, over the 100 SMA. That added to it. Where's my stop? Well, my emergency stop clearly is always going to be 2 ATRs below my entry. So if I hit my maximum allowed loss, I hit it, I lose the $500. That's it. Where's my end of day stop? A little different here on V2s. This is the washout bar of the V2. Bar 1, 2, 3. 2 washes out 1, 3 closes above 1. My end of day stop is a close below halfway of the washout bar. Well, that is $42. Right now it's $40.68. Greg, isn't that below your stop? It is currently, but again, this is a monthly bar, so I have to wait until the end of the month to make my decision. Well, it's March 5th. It is not the end of the month. So if it comes down, in the middle of the month, if it came down here and hit my emergency stop, sure, then I get out, because then I don't wait for the end of the bar. But as far as an end of month stop, I have to wait for the close of the month to make this decision. But if this was the end of the month and it closed below halfway, that would be my end of day stop and I would get out. So this particular trade, Airlines doing horrible, of course, with the higher gas price, down 9.76% so far. But I position size correctly. I position size based upon volatility. So the dollar loss is not large. So there we go. Those are the trades. Nothing to definitely write home about. This is, this month here has been very difficult with swing trades. But keep in mind, things eventually will turn around. Follow what you're doing. Do the right thing as per your trading plan, and don't get discouraged. If I could say anything, there are times where you feel like you're never going to make any money again. There are times when the market is good that you feel like you're never going to lose money again. I can assure you that both of those things are going to happen, but stay positive, position size correctly, follow your rules. You will get through it. This is a good learning experience for traders, because the market doesn't always go up straight up like it has for the last 2 years. This is real trading. And going through this will make you a better trader. But you have to survive, and survive by taking fewer trades. Like me, I take one a day, or one a week, or one a month. Position size correctly, follow your plans, and you will make it through it. So keep your head up. Don't get discouraged. This is a very, very difficult time. I've been through many of these cycles, and there is light at the end of the tunnel, but just stick with your plan. Okay. All right. So those are the trades. Want to talk a little bit about trader psychology, and this is from Mark Douglas's book, Trading in the Zone. Mark Douglas, wow, one of my very, very favorite trading books. If you have not listened to it, please do yourself a favor. There's something special about this book, and really talks about trading psychology. And it's a very famous book. It's available on YouTube, by the way. If you just go to YouTube and type in Trading in the Zone, you can hear the entire audiobook for free. It's great. You don't even have to buy the book. I try to read that book once a year. And there's so many gems and good trading words of wisdom in there. So I saw this here. I read it. I was like, whew, yeah, that's good. And so I just wanted to share it with you. So let's go through. The 5 fundamental truths of trading. 1, anything can happen. Yes. And based upon our current, what's going on currently with the market and with world events, you can see anything can happen. So don't ever say, well, that can't happen. Anything can happen. Please keep that in mind. You don't need to know what is going to happen next to make money. Well, yeah. I mean, none of us know what's going to happen next, but it doesn't mean that you can't make money. It comes down to risk to reward. It comes down to taking good, being patient, waiting for the best setups, and having good risk to reward ratios. If you're wrong, be wrong small, right? But you have the potential to make a lot of money, and that's the profitable math in trading. Keep your losses small, even if you have many of them in a row, because eventually you will have some bigger gains, and those will pay for your losses. So you don't need to know where the market's going. You just need to find levels in the market, getting out quickly when you're wrong. If you're right, being able to stick with it, sticking with your plan. Number 3, there is a random distribution between wins and losses for any given set of variables that define an edge. Well, sure. Yeah, I mean, casinos is a great example for that. They have an edge in their trading. Doesn't matter if it's blackjack, roulette, baccarat, right? They have an edge. Does it mean they win every hand? Of course not. If they won every hand, no one would ever play, right? It's the same with trading. So you are going to have wins, you are going to have losses, but if you have an edge in your trading long term and you play that out, the gains will overcome the losses. So that's random distribution. Just don't think you're always going to have wins. It would be nice, obviously, right? Sure. Can I sign up for the never lose another trade? That would be perfect. I would do it, but it's not realistic because we don't know what's going to happen. So just understand that there is a give and take in trading. Number 4, an edge is nothing more than an indication of a higher probability of one thing happening over the other. Yeah, people ask me, what does that mean, an edge? Well, this is exactly the right answer to that. An edge is nothing more than an indication of a higher probability of one thing happening over another. Like the trade with SPY that I just took over the 300-day moving average. There's a higher probability that I'm going to make money on that trade than I'm going to lose money on that trade. Doesn't mean I can't lose money on that trade. And if I do, fine, I'll get out very quickly, have a small loss. That's it. But if it trends, it could trend for a long time and I could have an outsized gain. So you make sure if you're going to put money on anything that you have some type of edge. And well, how do I know that, Greg? Well, etfreplay.com is what I use to backtest. So backtest, that will give you an idea of what kind of trade that you're using, whether or not it has a long-term edge. And if it doesn't, then don't trade it, right? You don't want to take your money or invest it in something where you don't have an edge. Number 5, every moment in the market is unique. That is true. I mean, it is true. What to do with that, I'm not really sure what to say on this one, but yes, it is true. So the 7 principles of consistency. 1, I objectively identify my edges. Okay, that's what I was talking about. Doing the back testing off the 200, the 300, the 250, the under 30, over 30s. So you have to identify your edge and make sure don't go into a trade unless you have an edge. Oh, okay. Oh, okay. Sorry, little break. My girlfriend is going to get me coffee. Thanks. Okay, love you too. Okay. Are you taking Piper? Yeah. Okay. Number 2, I predefine the risk of every trade. Okay, well, that gets back to exactly what I'm talking about of knowing where your level is, knowing where your line in the sand is. If it's under 200, you just get out if that's your level. But you have to predefine the risk of where your end-of-day stop is, where your emergency stop is, and you have to also position size. That is part of predefining your risk. Number 3, I completely accept the risk or I am willing to let go of the trade. This is huge. You have to, this comes back to maximum allowed loss as well. You really, really, really have to be okay with your maximum allowed loss. I teach students private one-on-one lessons. I have a lot of students when we talk about maximum allowed loss and they say, oh yeah, I can risk $5,000 as a maximum allowed loss. And I'm like, really? Keep in mind, you may have 2, 3, 4, 5 positions. Well, what about if we have a horrible day and all 5 of those hit their maximum allowed loss? Well, that would be $25,000, wouldn't it? Are you okay with that? Well, if you have lots of money, okay. And it's a small percentage, sure, no problem. But what I have found is whatever you think your maximum allowed loss is, cut that in half. That's what I found over the years. It's that you really have to be okay with your maximum allowed loss. A lot of people say, oh yeah, I'm okay with that loss, but are you really? Are you really? So I completely accept the risk or I'm willing to let go of the trade. So yeah, accept the risk or just get out or just don't take the trade, but you have to accept the risk. If you're scared of it, that's a killer. I'm telling you, it's really, if you're using scared money, it is difficult to make money. So my advice, use a smaller maximum allowed loss, feel more comfortable in the trade, give yourself some breathing room. Number 4, I act on my hedges without reservation or hesitation. Yeah. If you've come up with a trading plan, your trading plan triggers, then you've got to get in the trade. And if you're not able to get in the trade, then don't take the trade. I mean, if you have a signal and it matches up with what you're doing, why are you not taking the trade? I pay myself as the market makes money available to me. Well, that's exactly what I do, and that's exactly part of my approach, is getting out of partial profits as it moves up. I've had many of my students and coaches over the years tell me the same thing. Greg, take something off as the market makes it available to you. And here's Mark Douglas again. I pay myself as the market makes money available to me. I don't take the entire position off, but I take partial off. Number 6, I continually monitor my susceptibility for making errors. This is a great one. You know, when things are not going well and you're having a tough time trading, most of the time people are more careful then. Well, they should be, but a lot of them are. But when things start going well and you start making a lot of money, that's when people get a little loose with their rules and their thinking. And really, the two most important time to really continually monitor your susceptibility for making errors is when you're making a lot of money or you're losing a lot of money. It's really true. Number 7, I understand the absolute necessity of these principles of consistent success, and therefore I never violate them. That's it. Follow your plan. It all comes back to following your plan. So thank you, Mark Douglas. Of course, Mark Douglas has passed away, but thanks anyway, Mark. Your books have been great. They've been very helpful. They contain a lot of wisdom. Hope you're doing well wherever you are. But if you have not read Trading in the Zone, everyone, I highly, highly recommend it. And like I said, you can get it on YouTube for free. Just type in Trading in the Zone. It's a great, great book. So thanks to Mark Douglas. Okay. I talked about Frank's poem. You can follow Frank over on Twitter at FrancoD on Twitter. What a great guy. He posts great poems about trading, relevant to what's happening in the market. But I saw this today, wanted to share it with you. Today's market poem, The Long Haul. Nobody likes to think of it at all. Gratification delayed seems to appall, but it's how we gain experience from mistakes and heal from a fall. Patience helps the trader make the right call. Isn't that good? So true. The long haul. We want to be in it for the long haul. No one likes to think of it at all. Gratification delayed seems to appall, right? We want things to happen right away, but we need to take the long term. But it's how we gain experience from mistakes and heal from a fall. Patience helps a trader make the right call. Yep. We're all going to make mistakes. We're all going to have wounds that we have to heal from. Patience, patience, patience. You hear it from everyone in trading, and again, hear from Frank. Patience helps a trader make the right call. So thank you, Frank. Hope you're doing well. Please follow Frank at FrancoD over on Twitter. Okay, well, there we go. We got that out of the way. Let's take a rundown through my watch list. We'll look for some potential trades next week. Doesn't mean I just want to point this out. You know, I'll probably be marking a lot of different charts here. It doesn't mean that every time one of them does what I'm looking for it to do, I'm going to get in the trade. Remember, I'm just coming up with some potentials for myself, levels or conditions for next week to happen. And but keep in mind, I'm only going to take one trade per day. So Apple. Well, I don't think I'm going to mark Apple here at the moment. Yeah, down at the 200, of course, I would buy Apple down at the 200. If we have a 520 crossover, I would buy it there. But I don't see anything here on Apple remotely that looks like it's going to trigger for next week. Adobe. Well, we're at 37.92. Is it going to get down to a 30 RSI for next week? I guess it could. I don't think it's likely. It would really have to come down very, very hard. So I don't think I'm going to mark anything. I don't see anything potential here on Adobe. AGQ, wow. Well, silver, of course, has been going crazy. Boy, what a great signal with the 520 crossover that happened all the way back here on the 10th. But that boat has sailed. Very, very high here. You can see, look, the 300 moving average, we touched it, bounced off of it. Doesn't mean it can't go higher. We'll see what happens, but to get into AGQ for me, we're going to need a pullback all the way to the 200-day at least, or back into the value zone. I don't see anything to the long side right now. If you're in silver already, congratulations, you've done well, but I'm not going to be chasing silver up at these levels. AMD. Okay, so AMD would have been a legitimate signal here on Friday. Why? Well, it rejected the 250-day moving average. We also have the 300 below it. So I am going to mark AMD. This definitely could be a nice entry for next week. Give me a good risk to reward. And you might ask, well, Greg, it rejected the 250. Why didn't you take it? Well, I took SPY. I took SPY on Friday, and I only want to take one per day. And so next week, a couple things. If we get over the 200-day moving average, I could go in there. Alternatively, next week, if we have another intraday rejection of the 250, I could enter there. Or if we went all the way down, retested the 300, I could get in there. Well, you can see all the way back here on the 28th, that would have been an excellent time to get into AMD. It did respect that level, and it has been holding that level. Here we got very close to it again, came back down. So ideally, a rejection of the 300 would be where I'd want to get into AMD. If it rejects the 250 again, I can get in there. Or alternatively, if it goes above the 200, I could get in there. So I do like AMD quite a bit there. It has a lot of potential for next week. Amazon, very, very weak. It's a 4103 RSI. We have all the major moving averages above us. I don't see anything likely on Amazon for next week. ARC Innovations, well, of course, ARC ETF trades a lot of technology stocks. We are at 3540 RSI, so I can see this next week if we continue down, retesting the 30 RSI, which would be okay. We would also have a double bottom with a bullish divergence here, so I will mark ARC. Boeing, boy, not doing so hot tamale. I will mark Boeing as a potential. It's 3276 RSI. It looks like it went under 30, over 30 on Friday as well. Not a lot of confluences there. But it is Boeing, and if we had another under 30, over 30, it would be interesting. So I'll mark Boeing for next week. Alibaba, I will mark Alibaba 30.08. So we're very close to that 30 RSI level. If we go under 30, over 30, it's potential that I would take Alibaba if we have another under 30, over 30 next week. Berkshire Hathaway, very, very strong compared to the rest of the market, although I don't see any potentials setups for next week. Bitcoin, wow. Well, we had a big rally on Bitcoin. We've sold off pretty hard here. Do I see anything on Bitcoin for next week? I really don't, so I'll pass there. Anheuser-Busch, my gosh. Look at this. Everybody wants it. Boom. Now no one wants it. Do I want to buy Anheuser-Busch? Well, it's 3368 RSI. I think I'm just going to skip Anheuser-Busch. Beyond Meat. I think there's better than Beyond Meat. It is 3198. We are at the negative third ATR channel, but there's going to be a lot of these, and so I want to stick with the higher quality stocks. Here we go. Caterpillar. Well, I was already in this, and I did take a loss on this. Anything for next week? I really don't see anything. We've already reached those 30 RSI levels and bounced, so I don't see anything there for Caterpillar. CCJ, which is Cameco Corporation, you know, I would like to buy it at the 200-day moving average. It would give me a good risk to reward ratio. A lot of buyers come in at the 200, so I will mark CCJ for a potential. Carnival Cruise Line, boy, really, really strong move down here. My gosh. You know, I think cruising is going to stay around. So I will mark this. It's 32.47. Next week, if we went under 30, over 30, it would be a potential for me. DoorDash, nice little rally, came all the way back down on Friday, 39.11. Don't think I'm going to mark anything there. Here's the Dow Jones Industrial Average. Yeah, I'll mark this one for sure. Most likely scenario on the Dow would be a close over the 300-day moving average. If we have a nice rally up, that could give a good risk to reward ratio as long as it's not too extended over the 300. So I will mark DIA, Dow Jones Industrial, but the signal would be a close over the 300. Walt Disney, don't really see anything here as far as moving averages or RSI levels, so I'll just continue to keep moving. DocuSign, have earnings coming up, gonna skip that one. Etsy, boy, nice big move here from Etsy after earnings, but as far as anything next week really looking like it's going to set up, I don't see it. Facebook, well, yeah, I will mark Facebook. It's 29.63 RSI. If it closed back above the 30 RSI, I would probably take that trade. And this first trade did not work out, but it was a small loss, but it is 29.63. If it closed over 30 RSI, might be interesting to me next week. So I did mark Facebook. FCX, boy, of course, commodities doing very well. Congratulations to anyone that's in this, but right now, just too extended for me to get interested. Fiverr, don't see anything there. Gold, of course, been rocking and rolling here. Boy, what a move on gold off of that 200. My gosh. Congratulations to anyone has gold, but I don't see anything here as far as a good risk to reward ratio for next week. GNRC, same, do not see anything. Google, yes, Google would have been a legitimate entry on Friday for me with this intraday rejection of the 250-day. Next week, if Google does go under 250, over 250 again and give me a good risk to reward ratio, I would be interested there. Alternatively, if it moves back down to 300 SMA, that would be interesting. Or conversely, if it goes up, a close over. So that's what I was saying at the beginning of the podcast. Usually a stock has to go higher or lower for me to get in. So I would be interested if Google goes up and closes over the 200. I would also be interested if we have another intraday rejection of the 250 or an intraday rejection of the 300. Yep, so I do like Google. Goldman Sachs, well, I'm already in Goldman Sachs. If I was not in Goldman Sachs and it went under 30, over 30, that would be interesting to me, but I'm not going to try to confuse everybody by having potentials and then current trades, so I'm going to skip that. Home Depot, well, look, we're under the 300 SMA. I haven't back tested Home Depot, but let's do this again. So I'm going to put in here Home Depot, and we'll run the back test, and we'll see how does it back test well. Well, it does. If you're using the 300 as your level, it does backtest. Does not backtest as well as buy and hold. Buy and hold is up 836.6. The backtested approach, 235.2, has a little less drawdown. But yeah, I mean, I could see myself buying Home Depot if next week, if it closes above the 300, that's within striking distance. So I will mark that. IBB, do not see anything there. India stock market could have an under 30, over 30, but I think I'm going to stay away from that. Intel, nice big move up on Intel, but I don't see any new potentials here for next week. Russell 2000, do not see anything for next week either. Johnson & Johnson had a nice close over the 200 that kept going. Possibly a pullback to the 200. I don't know how likely that is, so I think I'll skip. Interesting, coffee has been really going down here with the rest of the commodities going up. Don't see anything on coffee. CarMax, kind of a neutral RSI at 40.69. Do not see anything there. Coca-Cola, Don't see any levels on Coke for next week. Lockheed Martin, of course, the defense contractors, just going parabolic to the upside. Congratulations. Anyone has positions in that, but way too far extended for me. Southwest Airlines. Well, I do have, I did have Southwest, right, on my monthly trade. So not going to mark anything there. On a daily, you could look for an under 30 over 30, but I'm going to skip that. Lyft, don't see much there. Mastercard, this would have been a legitimate entry on Friday. Look, it's 30.31. It went under 30, closed back above. That would be a legitimate entry on Mastercard. I would look for another rejection of the 30 RSI next week. You know, multiple rejections I like. I'd like if it got back over the negative third ATR channel. That's acting as resistance right now. So I will mark Mastercard. McDonald's almost took this trade on Friday. You can see the rejection of the 300-day moving average, right? It went below. There were no more sellers down there. That's why the market rallied. We do have the negative third ATR channel above as resistance, but I will mark McDonald's if we could get another go under the 250 and over the 250. I like the double confirmation that would happen. I don't know if that's going to happen, but I will mark that. So I will be interested in McDonald's if it goes under 300 again and then close back over. Merck, it's a pretty strong move there. You can see it bounce right at the 300. If we got back down, tested the 300, or alternatively tested the 200 again, that might be interesting to me, so I will mark that. Morgan Stanley, 29 financials have been extremely weak. Obviously, you can see it's just been loss of distribution down here. I will mark Morgan Stanley. If we have if we can close back above 30, it might be interesting. I'll have to see what the context of the day is. Microsoft, well, that was a legitimate entry on Microsoft on Friday with the intraday rejection of the 250. I will mark it. Microsoft is either have to do one of three things. It's going to have to come back down, test the 300. That would be my most desirable place to buy Microsoft. If it retests to 250 again, that would also be a potential place for me to buy Microsoft or close back over the 200. So three pretty good levels there. So I will mark Microsoft. Netflix, 33.74. We had this huge move up. We have pulled back here. MACD is green. I will mark Netflix. And what I'm looking for on Netflix would be an under 30 over 30. Go ahead and mark Nike as well. We're near the 30 RSI level. We're still above the negative third ATR channel. So if we had an under 30, over 30, and it gave me a good risk reward, yep. NVIDIA, be very interested in what NVIDIA does next week. If it closes over the 200, that's where I would be interested. Alternatively, if it went down, bounced at the 250, I would be interested there. Or if it bounced at the 300, I would be interested there as well. Pfizer, don't think I'm going to do anything with Pfizer. PKI, rejection of the 200 there. But I think we have a lot of potential entries that I've marked already that are better quality companies, in my opinion. I don't see anything there. Philip Morris, I would be interested in buying Philip Morris at the 200. I mean, we had a huge move up. Of course, it got sold into, but yes, if we could come back down, test the 200, I'd be interested in Philip Morris. PayPal, boy, PayPal has just been a difficult trade. I looking for under 30 over 30s. I'd be much more interested in something like Microsoft or Google or some of those trades. So I'm going to pass on PayPal. The Qs, don't really see anything here potentially on the Qs. Of course, an under 30 over 30, but I don't know how likely that is. Rio Tinto, nice move up with commodities. Don't see anything likely for next week. Shopify, well, let's mark Shopify. We are at 2983 RSI. We are at a negative third ATR channel. 92% of prices tend to bounce there. So if I get a nice gentle close over the 30 RSI, giving me a good risk to reward ratio, I would be interested in Shop. So I marked it. SIVB, don't see anything there. Silver, of course, is running off like a rocket ship. Possibly a pullback to the 200, but I'm not gonna mark silver. Snap, do not see anything on Snap. Virgin Galactic, don't see anything there either. The SPY, of course, I did buy the SPY with the intraday rejection of the 300 RSI. Next week, if it were to close below the 300, I would get out. But if it closed back above, I would get in again. So I will mark the SPY even though I'm in the trade, keying off of the, if we had another retest of the 300. Teladoc, don't see anything there. Teradyne, don't really see anything there either. Bonds have been all over the place. Craziness, down, up, down, up. I don't see anything on bonds. Tesla, yeah, I'm going to mark Tesla. Look, we closed barely below the 200. The 200 is 839.77. We're at 838.29. Tesla was down on Friday, much less than the rest of the market. So good relative strength there. So for sure, Tesla has a lot of potential for next week with the close over the 200. That would be one approach. Or if we tested the 250 here or the 300. So lots of good levels on Tesla, either to the upside or to the downside. Twitter, don't really see anything here on Twitter on the daily. Udemy Software, don't really see anything there either. Of course, airlines with the price of gas and oil. Right now we're at 30.67. Scary trade, but an under 30, over 30 in the right way might be interesting after such a big sell-off. So I will mark that. UNG, natural gas, I don't see anything there either. Boy, United Health Group just went up like crazy, didn't it? Don't see anything likely for next week that gives a good risk to reward ratio. Oil, of course, has just been exploding upwards. Do not want to get involved in oil either to the long side or the short side. Very scary. VIX had a big run here. Don't see anything on VIX. Verizon, potential pullback to the 300 or 200. Don't think that's likely, so I am going to pass. WBA, don't see anything there. Walmart, wow, what a big move up here. Too extended for me. Energy, too extended for me. Financials, very, very weak. But yeah, I would be interested in buying XLF if we could. Well, you know what? Let's backtest that. This is a good example of an edge. Let's see if there's an actual edge or if I'm just assuming there will be. Well, let's run it and see. Buying the XLF with an under over 300, yeah, it does backtest positively. So there is a slight edge there, 133.70 compared to 189, but the drawdown's hugely less than the buy and hold. So for sure, yeah, But what is it going to need to do? It's going to need to at least bounce off the 300 next week. So yeah, I'll mark that. Real estate, well, nice bounce off the 300 SMA here. We're right up here again to resistance at the 200. This would be a little too high for me to buy, so I will skip XLE. XLU, wow. Almost bought XLU back here last week with this nice little gentle intraday rejection of the 200, and boy, that would have worked out well, but I didn't take it. But I don't see anything likely now for next week. Healthcare, don't see anything likely. ExxonMobil, big move back up. My gosh, don't see anything likely there. And Zoom, Zoom, look at that. Stopped right at the 30 RSI. I think I'm going to skip Zoom. So the ones that I like the best for next week, let's just go through here. Advanced micro devices, either if it closes above the 200, that would be interesting for me. If we had another retest of the 250, or alternatively a retest of the 300 on a great company like AMD. Yep, that has my interest. ARC, less interest than AMD, but an under 30 over 30 might be interesting. Boeing, an under 30 over 30 RSI on Boeing might be interesting for me next week. Alibaba, another under 30 over 30 on Alibaba could be interesting. CCJ, Cameco Corporation. Yeah, I would buy this back at the 200 if I got a good risk to reward ratio next week off of the 200. Carnival, 32.47. If we went under 30, over 30, that could be interesting there. The Dow Jones, if we could close above the 300, that would be an interesting spot for me, or alternatively an under 30, over 30. Facebook, 29.63 RSI. If we could close back above the 30 RSI, that's where I would get long Facebook potentially. Google, lots of good areas here on a big company like Google. First, if we closed above the 200, that's one location. If we have another retest of the 250, that's a second location. Or if we came back down, tested the 300, that would be another great location that does back test well. So I do like Google. Home Depot, if we could jump back above the 300, use that as a level. Mastercard, people still are using Mastercards out there, so potentially an under 30, over 30. McDonald's, a retest of the 300 would be an interesting place for me. Merck came back, tested the 200-day moving average or tested the 300 moving average. That would be interesting. Morgan Stanley, if we had to close over the 30 RSI, that would be an interesting location for me. Microsoft, a retest of the 250, I would love. A retest of the 300, would love that even more. And a close back above the 200, that would be legitimate, but that would be my least favorite. So either a close above the 200, another intraday rejection, or close under, close over the 250, or a test of the 300. Netflix, an under 30, over 30. Nike, an under 30, over 30 on the RSI. NVIDIA, love NVIDIA with a close over the 200. That would be a super interesting place for me. A test of the 250 would also be very interesting, and a retest of the 300 would be interesting. So a lot of potential for NVIDIA next week. Philip Morris, don't know how likely this is, but there is a lot of support here with the 200 and the 100 confluence. So yeah, I would be looking to buy Philip Morris if we tested the 200, or alternatively the 250. Shopify, 29.83. It's kind of a wild one, this company, but a close back over the 30 would be something for me to take a look at next week. SPY, I did go long SPY, but for next week, another retest of the 300 would be an interesting location. A close back above the 200 would also be interesting, or a close over the 250. Tesla, really like Tesla here, either to the upside if we close over the 200, or to the downside if we test the 250 or the 300. United Airlines, really super scary, but an under 30, over 30 with proper position size, proper stop losses could be a potential. And then lastly, XLF. Like XLF here, I mean, we had a big move down. We are kind of bouncing in this range, but if we were to test the 300, I would definitely be looking to get into XLF. So anyway, those are the potentials for next week. Just wanted to mention to everyone before we close that I do teach private one-on-one lessons in the evening time via Skype. I love to teach. I think I'm a really good teacher. I've taught many people from around the world. I have been trading for over 25 years. I use 5 different trading approaches. Right now, most of the trading approaches that we're looking at are deep dip buys off of the 200, the 250, the 300. But in my course, I teach you all 5 approaches, right? You need a lot of different tools in the market because market conditions change. Right now, we're in deep dip buy mode. Okay, well, I've got that tool, right, for the market conditions, but there are all sorts of different other approaches that I use. I use a total of 5, and in the lessons I teach you all 5. I teach you step by step. It's a great course. You're going to be a better trader. I think one of the best ways to get good at anything is to study one-on-one with a mentor, whether it's baseball or football or golf or violin or trading. And that's why I offer these courses, because I think it's the best way to learn. It does cost $1,750, but it's worth every penny. I promise you. We do lots of studying. I ask you a lot of questions. We do a lot of simulation trades, and I just think it's a great way to learn. And like I said before, you will be a better trader when you finish this course. And so if you are interested, the way to start the process, just email me. The email is in the link of my YouTube video, of this YouTube video. Just email me, say, hey, Greg, potentially interested in taking your course. I'll write back and say, hey, great, let's set up a Skype call. The Skype call's free. It's not a sales call, everyone, I promise you. I just want to get to know you better, learn about your trading challenges, your goals, what you're trying to achieve by potentially taking the course. And then it's a good time for you to ask me any questions about the lesson, right? Any particular questions you have. And when we're done, promise you there will be no pressure after the call. It's up to you. You can think about it as long as you want. And then one day, if you decide, hey, today is the day I'm starting, I'm going to email Greg, then great. I look forward to that. We'll get it all set up and away we'll go. And I promise you, you'll be happy that you took the course. Number 2, I do have a great online course available at udemy.com. It's super affordable, but don't let the affordable price fool you. It has so much content. You know, it's about 12 or 15 bucks, but the course is called the Deep Dip Buy Stock Trading Strategy, which is the market conditions we're experiencing right now that you would use in the market that we have here. It's a great course. So many reviews from all over the world, such good feedback. And the best price, you know, it's 12 or 15 bucks, but you get so much content. 26 videos, 9.5 hours of actual video, 15 study guides. So I do have a link to the description there. You know, if you're not doing anything this weekend, you're going to learn so many things in that trading course, that online trading course. And so the link's in the description. And then lastly, if you like today's podcast, I really would appreciate it if you could hit the thumbs up button. It helps to build the channel, helps to keep the channel around, lets YouTube know that there's some valuable content here. So it's been a wild week. It really, really has. Again, I just want to reiterate, please be patient with your trading. Please wait for the best setups. Please follow your rules. And then in your mind, just realize that, yes, we have had a very difficult, volatile time, but it doesn't mean it has to last, right? I know things sometimes seem dark, and then sometimes things, on the other hand, it seems like you're never going to lose money again, but you are going to make money again. You will lose money again, but please be careful. Think things through, position size correctly, get out when you're supposed to, and survive this market. If you can survive, you're going to learn something, and you're going to go on to have better times in the market when the market does turn, and eventually it will turn. It will turn, but sometimes we have to withstand the challenging parts, which is going on right now. All right, so be good to yourself, be good to others, try to go out, do something nice for another human being today. It would make the world a better place if everyone were just to go out and do a nice thing for another human being. I'm a big animal lover. If you wouldn't mind, if possible, if the opportunity presents itself to do something nice for an animal each day, they would appreciate it as well. And be good to yourself, stay healthy, exercise, take time each day to do some breathing, take time to do a little presence work, and it will help your trading as well. All right, so have a good weekend. Hope you're good, hope you're safe. Please drive safe. Hope this video helped today as far as looking at some potential trades for next week. We don't know what's going to happen, but we have to know what we're going to do, right? We never know what the market's going to do, but we have to know what we're going to do by creating and setting a plan. So If you have any questions, you can post them in the comments below. Again, if you like today's podcast, I would really appreciate it if you could hit the thumbs up button. And I appreciate you being here. And stay safe and have a good week next week. All right, take care, everyone. And on the way out here, I have to run the U.S. Legals. Thank you. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.